if you're a creator of NFTs, how is that taxed? Well, if you're a creator, then that is a business. You're in the business of creating whatever that NFT is, whether it's art, music, whatever it is. There is a cost that you experience to create it. When you sell it, you have income, and you're taxed as business income. That difference between the two, whatever your profit is, you're taxed as business profit. For a lot of home creators, that would go in as on Schedule C of your tax return as self-employment income. It'd also be subject to Social Security tax. And now that NFT, so it's business income for you. Now you've sold it somehow, whether directly or through an exchange. It's now somebody else's property. That person, it's now an investment asset, and they will be taxed at the gain or loss they experience when they unload that in the future. If for some reason you as the creator buy back or take back into your own possession something that you created, then it becomes once again an asset owned by the creator and a business income. So it's taxed differently. That's the general thrust of it. In terms of documentation that you need to keep, you need to document what you bought it for and what you sold it for. A lot of the NFT exchanges have terrible documentation, not at all like you would expect from, say, Coinbase or Kraken. You get hardly usable transaction history. So don't depend on your Raribles and your OpenSeas to give you good documentation, or whatever exchange you're using. You need to keep your own record, screenshots, save these things permanently. If you get emails from the exchange saying that this was bought or it became yours, you want to save that and keep all emails, even if they're stupid sounding. You want to, if as long as it's not a marketing email, you want to save all exchange in email for a permanent record. We had one person who had an exchange that closed on him, but we had the email records of the transactions, and these records were horrible. They basically said, what you bought has happened today. But it was sufficient for us then during the IRS appeals to show, hey, look, that transaction that you want to tax as income was actually a transfer, and here's the evidence, because we had an email that suggested it happened at that time. So that was enough. So definitely save all emails. Preferably keep screenshots, dump them all into a standard directory that you never get rid of. And I guess it is very challenging with NFTs. Some NFTs generate conflicting transactions on the blockchain, especially because you're buying them like DeFi. If you're in a bidding situation, each time you bid, you may lose a coin. Like, let's say you bid one ETH, and you bid a second ETH, you bid a third ETH. These are all coming off until you either win, in which case you get an NFT, or you lose, in which case you get those, say, 3 ETH back. But that return of ETH may be from a different wallet than what you sent it to. Unless you have records that you made the bids and you lost, it could look like under an audit as though you sent 3 ETH to somebody and somebody else sent you 3 ETH back, which would make that a taxable event of 6 ETH, which would be a very bad situation. So the blockchain is not your friend in audits, so you need to keep your own records so that you can explain what was going on. So by all means, don't hesitate to buy NFTs, but just document everything you're doing. If nobody else is documenting it for you, that's why you need to do it. But keep going.
Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. If you have tax questions that we can apply to, we will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.